Hey, what's up, Market Moose? Mike from the Moose on the Loose. How are you doing on this Wednesday? All right, so a stock moves by 10%, up, down. Do you know why? Do you care to know why? Well, I think you should do. Most importantly, which kind of action should you make after a stock moves that fast on a short period of time? Sometimes it's noise. Sometimes it's news, and then you have to make the difference between both. Because if you're missing on an important information, then you're on for a catastrophe in your portfolio. But if you know what you're doing, then you know if you should buy a little bit more, or if you should hold, or if you should sell, and then take your profit and run. So there is a way to understand how it works, and it's to review quarterly earnings. You have 3 simple steps here in this video to know how to do that and how to make the difference. So let's get started with quarterly earnings. This is the moment when the CEO sells you the idea of investing in the stock. And when you're going to look at their CEO comments, this is always going to be the same thing. Oh, we had an amazing quarter. It's great. Even if they cut their dividend, they're going to tell you, oh, we have restructured our business. We gained financial flexibility. This is the moment where the CEO sounds like a salesman, and most of them are not, they're not lying, but they're try to sugarcoat the whole thing and tell you that everything's going well. I even read sometimes in the energy industry at one point, I read like a CEO comment saying that everything was going well, that the dividend was safe, and they were continuing to grow their business. And literally the next month, they announced a dividend cut. That was just kind of like, dude, slow down on the BS, and then maybe you can be a little bit more transparent. It's going to help everyone. So in the quarterly earnings, you're going to find tons of information. So financial results, you're going to know about the expectations from analysts. You're going to know about the guidance from management, so telling you what they expect to generate in the future. And you're going to have important news. If you want to know how to read a quarterly earnings and within 15 minutes, I have a webinar tomorrow. You can subscribe at moosemarkets.com/webinar. We're going to do a deep dive in this topic of today's topic into how to read quarterly earnings, and I'm going to answer all your questions. So again, moosemarkets.com/webinar, 100% free. You get the free replay, and you get to ask all your questions if you go for the live session. So all right, so now let's take a look at those 3 steps to review the quarterly earnings. The first thing that you should be doing is to open the press release. Press release is a condensed amount of everything that happens. So you don't have necessarily to read the 30 pages of financial statements with charts and stuff and notes and accounting lingos. You can go with the press release. With the press release, you're going to start with the highlights. So that's super important. And then you're going to have that CEO comments. And then sometimes the CEO is going to give you pieces of information that make sense. So it's important to have the context as well as you read the highlights, and the highlights will be a focus on revenues, on earnings per share, on dividend payments, on cash flow. Sometimes we're going to talk about big news as well. So that's another important part. If they made a big acquisition or divestiture, for example, if they have a new product that are launching, a new service, so something exciting, something notable. So the highlights is going to give you within seconds what was the color of that 3 months that just went through. And as you go through the press release, usually it's a couple of pages, and you may have the important charts in it, which is interesting. So you can see how revenue, earnings, and debts and all of those stuff has evolved over time without being overwhelmed by a long list of charts and numbers. So that's an interesting part. And then you're going to have the portion where they talk about the guidance. So the management team will tell you at the beginning of their fiscal year. So honestly, it's kind of weird because it could be at any point in the year, in the calendar year, that it's the first quarter of their calendar year on their side for the fiscal year. But they're going to tell you what they expect in terms of revenue, earnings, margin, what they expect to do in terms of acquisitions, stuff like that. So it's interesting because then at the very first quarter, you have the guidance, and throughout the year, they will either revise those guidance, hopefully positively, telling you, oh, it's going better than expected, or they're going to reaffirm it, which is good, or they are going to revise them downwards. And this is where a lot of stocks go down. Even though they had a good quarter, if management say, well, you know what? Next quarter, it's not going to be that great, or the rest of the year is going to suck. Well, then you see the stock price go down. That's a major driver for a lot of stock price drop. So now that you have read the press release, that's step number one. The step number two is to put numbers in context. You have to ask yourself why there is growth, why there is decline. So it's one thing to say revenue declined by 2%. But then when you read a little bit deeper and you understand what's the context was, oh, they sold some business segment, so that affected the sales for the quarter. They suffered from currency fluctuation, like a company that makes most of their revenue and profit outside of Canada, for example. Think of like Alimentation Couche-Tard. Well, FX is going to play in their favor or against them. So sometimes you're going to see, in current number or same store sales, it's positive, but then because they sold some stuff, because they got hurt by currency, the revenue is down. So you have to put that into context. Same thing with the earnings per share. In an ideal world, you maintain the same margin, meaning that whenever you make a $1 sell, you make a 25% profit. So the profit will grow as the sell grows. But sometimes revenue goes up and then the earnings remain flat, or you have like revenue going up 12% and the earnings per share is up 5%. So what's the difference between the 12 and the 5? You need to understand that. So there are extra expenses, maybe more amortization. Is it a cash number or an accounting number? I mean, if it's because they made several acquisitions in the past and now they have like lots of amortization, not the end of the world, because that's accounting. It's not affecting their cash flow, which is a good thing. You can then look at the cash flow from operation and free cash flow to understand a little bit more the context around the business and where they're going. And finally, of course, if you follow the dividend triangle method, you've looked at the revenue, you've looked at the earnings, and the last thing that you're going to look at is the dividend payment. Is it growing? It has, like, sometimes they're going to tell you if it has grown over the past 12 months. So of course, they're not going to announce like 4 dividend increases per year. I mean, some companies does, but it's really rare. Most of the time it's going to be once or rarely twice a year, but they're going to tell you, yeah, like the board has voted for the dividend payment, but it has increased over the past 12 months by 7%. So you're just like, oh yeah, so everything is looking good. So you put numbers into context. Sometimes it's not enough. So you read the press release, you wrap it around with some context, but then you need to do deeper research because you quite not understand why earnings are going down. Sometimes they're not going to completely explain it to you either. So you need to dig further. And this is where the hard work starts. So deeper research, step number 3, not always necessary. Most of the time, after step number 2, you can move on to the next company in your portfolio. It's business as usual and you all feel fine. But and sometimes you're going to dig into the financial statements. A good example was I really wondered if BCE's dividend was safe last year. So I started digging into the the interest charges, the debt, how it's going up, what's the maturity. You're going to find all of that information in the financial statement. It's a lot more work, but if you have questions that have not been inserted in step number 1, number 2, you must do them. 2 shortcuts I can offer you though is first, go through the earnings call, and then you can like use the good old Control F in the transcript to find like specific information about debt, about interest, about dividend, about growth, whatever. So that's a good way to make that shortcut and make your life easier. And another one is you can ask AI. So you can pull out the transcript, you can send that into ChatGPT, for example, and ask ChatGPT, what's the summary regarding this or that point, and then it's going to tell you. So it's really interesting to do that because you have a better understanding. An easy way, a shortcut way, if you don't want to step number 1 to 3 here, is to let somebody else do it. This is what we do at DSR Pro, actually. We have a team of financial analysts. They go through those earnings, they understand it, they put numbers into context, and they do the deeper research when it's necessary. They wrap this up in a great summary, and they send you an email saying, hey, you have like those stocks in your portfolio. We have reviewed them, so then this is the time to review those stocks. You don't have to look at when the company is issuing their earnings statement, if there's any important information. We do all of that for you, and when it's ready and baked, well, and ready to be served, we send the email for you. If you want to know more about that, well, it's a good time to assist at one of my webinars at moosemarkets.com/webinar. Tomorrow, we're going to talk about how to go into those quarterly reviews. I'm going to give you plenty of tricks, cheat sheets about that as well. It's going to be really interesting. So moosemarkets.com/webinar. If you cannot attend live, register anyway. You're going to get the replay. All right, Moose, that's enough for today. Tomorrow, we have Nelson from the Key in Dividend Investing for another interesting discussion that we're going to have. And until then, don't forget to stay invested.